We're about to turn your phone into the only brokerage you'll ever need. That's the jaw-dropping promise Coinbase just dropped on Thursday. And if it delivers, the way everyday Americans buy, sell, and even bet on the future could be flipped on its head within months. But here's where it gets controversial. Coinbase isn't just adding a few more coins to its menu. It's quietly preparing to let U.S. customers trade tokenized versions of Apple shares, Tesla options, Super Bowl prediction markets, and brand new startup tokens, all inside the same app where you once only bought Bitcoin. In other words, the line between crypto exchange and full-blown Wall Street brokerage is about to vanish. Max Brandsburg, Coinbase's VP of Product, told CNBC the rollout will start in the next few months for U.S. users, then trickle overseas as regulators give us the green light. He calls the new platform an everything exchange, a single on-chain hub where stocks, derivatives, prediction markets, and early-stage token sales live side by side. Imagine opening one app, tapping once, and instantly swapping a slice of NVIDIA stock for a wager on next month's Fed rate decision. No separate brokerage login, no ACH transfer delays, no 9:30 a.m. market open. And this is the part most people miss. Coinbase isn't pioneering tokenized equities in a vacuum. Competitors like Robinhood, Gemini, and Kraken have already rolled out similar products, but only to users outside the United States. By targeting U.S. customers first, Coinbase is effectively leapfrogging its rivals on their home turf, a move that could pressure regulators and competitors alike to speed up their own plans. CEO Brian Armstrong has been blunt about the endgame. He wants Coinbase to become the world's dominant financial services app within 10 years. Thursday's announcement is the clearest roadmap yet. It also lands just hours after the SEC unveiled Project Crypto, a sweeping initiative designed to rewrite securities rules so that stocks and other traditional assets can trade on blockchain rails. Translation: Washington appears ready to bless the very products Coinbase is about to launch. Why the sudden regulatory warmth? Industry insiders point to the Trump administration's broader effort to unwind the Biden-era crackdown on digital assets. Tokenized stocks, digital tokens that mirror the price of real shares, have exploded in popularity this year precisely because policymakers are signaling a softer stance. In plain English, the government seems to be saying, if the tech is safe and transparent, let's experiment. Of course, Coinbase's core business is still trading fees from retail and institutional clients. But the company is clearly betting that the next wave of growth will come from everyday consumers who want more than just crypto. 2 weeks ago, it teased the Base App, a stablecoin-powered super app meant to be the Western answer to China's WeChat. Thursday's expansion is the second domino. Once users can trade everything from Netflix shares to election futures in one place, the app becomes far stickier and far more profitable. Let's zoom out for a second. If Coinbase succeeds, the implications are massive. Traditional brokerages could see an exodus of younger investors who prefer the 24/7 fractional instant settlement that blockchain rails provide. Regulators will face pressure to clarify which tokens are securities, which are commodities, and which are something entirely new. And everyday investors will need to ask themselves a thorny question. Do I trust a crypto exchange to custody my Apple shares? So, is this the democratization of finance, or a risky blurring of lines that could end in spectacular blow-ups? Will tokenized stocks truly mirror the rights of traditional shares? Dividends, voting, corporate actions? Or are we creating a shadow market with fewer protections? And perhaps the most provocative question of all, if your stock portfolio and your Super Bowl bets live in the same app, where does investing end and gambling begin? Sound off below. Are you ready to trade Tesla and election odds in the same swipe? Or does this feel like a bridge too far? Let the debate begin.